Yep, it's
There it is.
broadcasting now.
Okay. So in that case, it seems that we're live. Good afternoon, evening, morning, everyone. Just by way of brief introduction and context from my side, I was remembering back to Davos in 2018. And I think it was to the horror of about 95% of the Davos delegates. There was this enormous white building right along the center of the main promenade that was called Crypto HQ. And you had all of these kind of quite smug, confident, bearded people standing outside the entrance and sort of whisking in and out. And everyone was sort of wondering what on earth is going on in there. And then and one evening I went into Crypto HQ. They were drinking the best champagne of any party in Davos. And then there was this commotion. And I thought, there was a huge fresh tuna that was being lugged up the stairs and then put onto a table. And then you had these chefs started making the freshest sushi that you've ever seen. And I wondered, it was a kind of excess that I hadn't really seen since sort of Russian equity conferences in the 90s and sort of early mid 2000s. And I wondered, is blockchain and Bitcoin the new exotic Russian equity? Is this going to be the future, or am I going to look back at this Davos experience as some distant, faint dream that wasn't really correlated with any reality? So this brings us on to our discussion. Welcome to Bitcoin and Blockchain, the Future or Best Left in the Past. And we have two fantastic speakers who are going to help us get to the bottom of this question. Andrei Movchan, who I think everyone knows, one of the most famous and successful economists, investors, and commentators on Russia. And I guess someone who's been watching Bitcoin from a bit of a safe distance, but we'll find out more about that. Welcome, Andrei. And Dan Wolfe, who, in addition to being on the boards of companies like Uralkali and Segeja, also founded and now runs Simoleon Long-Term Value, which is a fund that invests in liquid crypto assets. So someone who's, I guess, a little bit closer to the day-to-day of this topic. So with that, I'll just quickly remind everyone what the format of today's debate is. We have 6 questions. I'm going to ask each speaker to speak for up to 3 minutes on each question. And whoever is first to respond will then also be given an optional 30 seconds for a final comment before we move on to the next question. So with that, gentlemen, поехали. Dan, the first question I'm going to come to you on. So tell us about how widely cryptocurrency will ever really be used in practice. We talk about it all the time, but when do we get to buy coffee in Starbucks with cryptocurrencies? What's the use case in your view?
Well, thanks, Tom, and Andrei, thanks for agreeing to debate with me. I expect they will be widespread used, but I don't think it's going to be anytime soon when grandma's buying coffee in Starbucks or anywhere else with Bitcoin. It's interesting that you Starbucks, they have been announced as one of the companies that has agreed to enter the test for the Chinese cryptocurrency, the digital yuan, as in the 4 cities outside of Beijing where they're doing this. So there is some sense. I think, sort of it depends on what we say by widespread. Right now, all of the cryptocurrency in the world, including Bitcoin, and it includes thousands of coins that are certainly worth nothing or maybe even less, is around 0.2% of all the money in the world. So to go from where we are now to 5% would be a huge increase, and that would be somewhat widespread. And remember, of course, that when we talk about the currencies of the world, there are 53 in Africa, and there's Latin America and Asia. There's lots and lots of currencies. It's not just the dollar and the euro and the ruble. But I think in order for that to happen, a lot of things have to happen. They're not very easy to use. It's a complicated thing. When people ask me what they should do to get up to speed on Bitcoin, I say, well, the first thing you can do is, if you have 40 minutes, go online, search for cryptocurrency, open a crypto wallet, and put 50 or $100 or 500, 5,000, whatever you want into it. But the reason I do that is it is somewhat complicated. It's not as easy. It's certainly much easier to pay with your credit card, certainly now that you can pay with your phone or your watch. I do think that the widespread will depend on where people are. People whose local currencies are less interesting or less likely to hold value are much more likely to use it. So whether it will be widespread use for currency in places like North America or Europe, I think not as quickly as it will be in other places where you have many more compelling reasons for people to use the currency. And then finally, you know, there's 1.7 billion people at least who don't have bank accounts. They don't have credit cards. So other than cash, they have problems. But Credit Suisse will tell you that 90% of them have a smartphone. So I think a large portion of those people too will begin to be served through fintech companies that will be much more open to using Bitcoin, particularly if they can't get fully licensed. And one final thing I would say is I think, you know, transaction costs now are somewhat prohibitive, particularly on the Bitcoin blockchain. And certainly in order for it to be widespread for payments, it has to be, you know, competitive at least for both the buyers and the sellers, you know, compared to credit cards and cash.
Thank you. Thank you. And with that, I'm going to come over to Andrei to give us his perspective on this.
No, well, I generally would agree with Dan said, but probably with another sign as a result. Let's start with basic things. Cryptocurrency is a symbiotic thing. It's a structure that includes crypto and currency. And crypto is a technology. It's kind of a blockchain technology we use now. And nobody says that there wouldn't be thousands of technologies of creating a digital currency in the future. And like with diskettes, which came and they vanished because new technologies came in, blockchain would most probably vanish in a course of 5 to 10 years, because we'll have better technologies to cryptosize currencies, if you wish. Because blockchain is not a very good technology eventually, and we speak about that later on, but the technology has many vulnerabilities and many failures and many shortages here. And the major one probably is that nowadays a transaction with blockchain is about 5,000 times more expensive than a transaction with a Visa card, which means in no way grandmas and grandpas in Africa can use it with their smartphones. It's prohibitive. And even when you use it with your smartphones, you need to be smart enough, for example, not to use identical private keys 2 times in a row. Because if you do that, you lose the security of your key. And you need to understand how to operate with that. And the majority of people do not know how to operate their private banking online. And it's much easier than to operate the Bitcoin wallet. And many other things. On the other side, the 3 agreements of the supporters are the independence from the state. But if it's independent from the state, it's not a currency. A currency, by definition, is a thing which is obligatory to be accepted as a matter of payment or on a territory. Bitcoin is not. Nobody is obligated to take it as a payment. And if nobody is obligated, it has no territory to be used. It's like Dutch tulip bulbs. You can pay millions for that. You can exchange them. You can believe that your wealth is entirely being structured by these bulbs. But one day they just disappear because nobody is obliged to use it as a value. The other one is the finite nature. People say there's not much Bitcoins in the world. On the other hand, the fiat currencies can be issued more and more, and they are being issued more and more. But that's not true. Bitcoin is probably finite, save to forks and whatever. But other cryptocurrencies are infinitive. You can create as many cryptocurrencies as you want. Unlike gold, which is finite or quasi-finite, that's not. The third thing is confidentiality. But confidentiality is a disadvantage, not an advantage. Because in such a confidential world, the gangsters and the fraudsters have an advantage. Because you have no public record of what you have, and if you lose your wallet, you lose it, and you cannot return your money. If you are attacked, if you are hacked, you lose your money, nobody can help you. If hackers and gangsters get the majority in the decision-making world, they squeeze you and you don't have your money anymore. So I don't think that will work. Well, maybe another technology will get here. And as we forwent the diskettes, we will forego these technologies for better ones, but we don't have them on the horizon yet.
That's brilliant, Andrei. Now, in keeping with the rules, I'm going to give Dan a quick 30 seconds, but given that Andrei's touched on a number of aspects that we're going to drill down into in terms of the security aspects of it, the government backing, let's park those. But Dan, in terms of other points that Andrei has made, would you like a quick comment?
Sure. I would just, the only thing that I would note is I think the question of whether or not a currency is a currency, if government is not accepting it or compelling its acceptance, is one that we'll find out much more about. As we know, from the dollarization of many economies in the world, this may not be true. When Erdogan decided that his son-in-law should be head of the central bank, and all the Turks were not only afraid of what was going to happen to their currency, they were largely shut out of the dollar and euro markets. There were restrictions on them. 2 months later, when they did a poll, 18% of Turks said that they had a cryptocurrency wallet and they had cryptocurrency in it. So, I'm not sure that the state's monopoly will keep people from defending their savings if they have a path to it.
Okay, well, so we're gonna move on here. Thank you for that comment, Dan. So, Andrei, you actually already started to take us into this issue, but I'd like to delve into it. So, one of the words you always hear when you're having conversations with our crypto friends is sort of decentralization. Yeah, you hear decentralization, and it almost kind of sounds like the Holy Grail somehow. Is that right, or would you in fact say that centralization is rather what you need for a currency, for money to have value or to be useful?
Now, that's a great question, because first, we obviously don't know what's better, not because we cannot count the advantages or disadvantages of decentralization and centralization, but because there are advantages and disadvantages largely depend on how you centralize and how you decentralize. And poor centralization is bad, and poor decentralization is bad as well. As much as we see now, the blockchain type of decentralization is not the best one, or we even can imagine better ways of decentralization. And then there is a prominent saying that that a beast should not run faster than all other beasts in the herd. It should only run better than the worst one in the herd. And when we talk about centralization and decentralization, we pretty much can think the same way. You don't need to have the perfect centralization. You just need to have the centralization which is slightly better than decentralization. And as of today, the centralization of monetary systems is much better than the cryptocurrency system. There is no problem which is healed by decentralizing at this point of time. The centralized systems are secure, they are safe, they provide for very low cost of transaction. They provide governments with comfort, because governments can make their say knowledge, and they make money on centralized systems, and they control centralized systems, and they can help in crisis, as you may see, as now FRS is doing, and other central banks. They are helping economies with the centralized monetary systems. Imagine America had the blockchain system and was not able to issue dollars. How the American economy would have worked in that sense. And then we need to understand that government is the customer of the monetary systems, and people are just users of that. They do not order the monetary systems, and they do not directly pay for that. And we got to ask governments about what's better for them. And actually, until they decide to change, and China may decide to change, by the way, and maybe not. But until others decide to change, it simply would not work. And what we know from the practice now, the decentralized register, it's much easier to attack than the centralized one. If you compare the number of attacks on the cryptocurrencies proportionally to the number of attacks of the centralized monetary systems, it's degrees higher. I saw the data that as of December 2017, and that's the early round of the Bitcoin emergence. And we had about 22.5% of investors already being attacked, successfully attacked. They lost some of the value of Bitcoins because of the attacks. Nothing compared to the monetary system security and safety.
Thank you very much. And actually, before I hand over to Dan to continue on this, I'll just remind our audience that you are welcome to put your questions in the Q&A function. I see one question's already come in from David Hun, which we'll come on to in a bit. But back to you, Dan, to continue on this question of decentralization versus centralization.
Sure. Well, you know, it's funny, when I was thinking about this question, you know, what I said was, you know, it just has to be better than the alternative for it to be popular. So, you know, I think in the main, Andrei and I agree. I think where we disagree is, you know, whether people are more often customers of their currency or victims of it, right? We can think back to what's happened in Russia over the last 25 years when people have, by government fiat, had their savings taken away 3 times by my count. And so I think it's an interesting question. There are other problems with decentralization, right? We'll find out, not this year or the next year, but maybe what the Federal Reserve System is doing is great right now, but is going to end up being a big problem for the dollar later. We don't know, right? Infinite quantitative easing, you know, to the economist and Andrei must be a little bit scary. It's certainly scary to me. I also think it's very illustrative to think about what's happening with Wirecard right now. Right? Wirecard, for those who don't know, is a huge holding company with payment systems all over Europe. And it turns out that $1.9 billion euros that they said they had on their accounts in Singapore don't exist. And I've been asking and reading, nobody knows if people are going to be made whole by this, because the hole was in the holding company, and only the companies in the German company was registered by the German government, but as a payment system, not a bank, so they're not insured deposits. Same thing in Britain. So I think we also see, you know, centralized systems also break down. There can be big problems. I mean, it's not serious. And there are other problems too with centralizations, right? One not only needs to think about the fact that according to US law, every single dollar transaction takes place in the Southern District of New York. And this has put, you know, great pressure on countries that are under sanction from the US, and companies as well, because they're shut out of the dollar system. And so I think all of these things sort of push some people to be more in favor of having an alternative to fiat money. I don't think we necessarily have to think that it gets replaced. One of the things that I think is also interesting going forward is, you know, it doesn't make sense for every Caribbean country to have its currency. It doesn't make sense for every African. And so I wonder whether we might one day see, you know, pan-Caribbean, pan-African currencies, and whether decentralization might be more comfortable for some of the participants than some kind of a system which, especially for the smaller participants, basically shuts them out of being able to influence it, much like the smaller countries in the Eurozone really don't get to decide. It's Germany and France that decide what happens with their currency. And with that, I'll stop.
Fantastic, thanks, Dan. Andrei, you have the rights to a 30-second intervention.
Three minor things. First of all, we saw the major crisis with dollar and the economy with the pandemics. We saw the decline of S&P like 30% and the decline of the value of the bonds, and it was the brilliant time for Bitcoin to show up and show how it preserves value, but it didn't. It declined pretty much the same level. Mm-hmm. And when the equity started to grow again, the Bitcoin started to grow again. It actually shows that Bitcoin is not an alternative currency, but one of the exotic types of investments, which falls and goes up with the liquidity flows. The second important thing is with the Wirecard. The Wirecard is a provider. And if a robber takes money from your pocket, it doesn't mean that the monetary system fails. It means that robbery exists in the world. Wirecard is one of the rather small robbers in the world. And when we talk about the cryptocurrency systems, the very system itself is not flawless. It's being under attack constantly, and people lose money not because somebody stole Bitcoins from them, but they do that as well, but because the system has its vulnerabilities, and that's a problem. The third thing is Caribbean countries and smaller countries in Africa and Asia might rely on cryptocurrency structure for their joint currencies in the future. But it wouldn't be Bitcoin, which is managed and structured in a way where these countries do not control and do not cannot introduce changes or enhancements. So most probably it would be different cryptocurrencies and maybe not the blockchain based.
Fantastic, thank you. Now, I would like to come on to sort of government and regulation here briefly. Now, you know, some people are of the view that government should actually ban Bitcoin. Dan, I know you well enough to know that you wouldn't subscribe to that view. But where do you think the balance sits between sort of effective regulation versus leaving an environment that allows for innovation?
Mm-hmm. Thanks. I think it's kind of an interesting question. But before I answer that exact question, what I would say is when I was in law school, when we were talking about the philosophy of law, there's this idea in law, it's called the race to the bottom. And the idea is that you have competing jurisdictions which decide what they want to do for everything. And the example most widely used is Delaware for US corporations, right? As soon as Delaware says, if you set up a corporation here, it's only going to cost you a few $100 a year. You can easily get a registered address. We won't charge you a lot. We have a great court system that we're really good at deciding things. Well, you know, if California decides to make it hard and expensive and very heavy regulatory burden to open a company, guess what? People don't open California companies, right? And nobody outside of California opens California companies, right? So, and I think a similar thing will happen here. So while I'll try to say a little bit about regulation from the US in particular, I think this race to the bottom is a very real thing. And so if really well-known financial centers like Singapore or Tokyo or Shanghai or, you know, who knows, maybe the Koreans will do something, decide that they're going to be wide open for cryptocurrencies, I think that will have a huge it'll have a huge impact on the way it goes. So I don't think we should get too stuck on what the US and the Europeans do. For me, the idea that this is going to be interesting, no matter what they do, is powerful. I think the SEC has actually got it exactly right. You know, everybody was complaining that they kept Telegram from issuing its grams and everything. Well, Telegram's, you know, sold $434.5 million worth of what are clearly under US law securities to American investors. And so I don't see this as the SEC doing anything but regulating the issuance of securities. And it doesn't care that they're on the blockchain or that they're on the New York Stock Exchange. They have a set of rules and people should follow them. And so I think that's going to be, you know, sort of where we go. One thing that I always like to note is, you know, if you look into the history of money, you know, for much of the last 4,000, 5,000 years, money has been private. There's been widespread private money. And I think that this is a recent conceit of you need to have sovereign fiat money for it to work. I think we'll return to a place where there'll be some competition for money, and you know, money will have a hard time competing with the US dollar for the foreseeable future, but maybe not forever. And you know, finally, I think the Chinese experiment with the crypto yuan is interesting. And you know, for us as investors, we don't really make a big difference between a crypto asset, right? There's government bonds and there's private bonds, and the same thing with cryptocurrency. So, you know, we think of them all as crypto assets, whether their issuer is, you know, somebody who we don't really know who it is, or whether it's the government of China.
Fantastic. Andrei, I'll come to you, Dale, to continue on this subject of regulation. And I'll actually also just capture one of the questions that's come through from the audience, which relates to this, from our friend Stephen Konigsberg, who says, do you have thoughts on the effect of the Telegram decision in the US? Does this kill ICOs now that crypto is going to be regulated like any other asset class? So I'll throw that question into the mix, but give you leeway to respond how you will around regulation.
No, I probably would leave this question to Dan, who knows much more about what's going on in the crypto world than me. I am not a crypto investor, right? I try to look at that as an economist. But talking about the governments, well, I generally disagree with Dan's saying, actually. Let's start with the history. The history knew a few private money systems, but not recently. It was thousands of years ago. And before long, the generally accepted monetary system was gold and silver. And gold and silver was not private. It was the international standard. On the other hand, we had many things in the past which don't want to have in the future, like a natural economy, when everybody made its own pots and its own furniture and its own devices and lived on their own, isolated from the world. But nobody says we need to go back there. Why we should go back to private monies, right? Then talking about yuan, right? Crypto yuan is not a cryptocurrency, it's yuan. It's yuan based on kind of a crypto platform. And I, as an economist, I don't care about the platform itself. You can experiment with the crypto one and you can exchange the crypto one to the new one, alpha one, beta one, the gamma one, whatever it be. It should be efficient. And if Chinese see that that's efficient, that's fine. They're going to operate that, but then yuan will cost as much as yuan costs, regardless of the platform. Investing in crypto yuan would mean investing in yuan. And yuan is now weakening to the dollar, as we know. With regards to the governments and prohibitions and the cooperation of the state's authorities with the cryptocurrency producers, I do think that governments will wait for a while, because the cryptocurrencies are too small, they are too exotic to be attacked. Russian government is paranoid in a sense, and they attack whatever is moving. And American government is not doing that thing. But then cryptocurrencies now become a very good trap for criminal money. And because they became a very good trap for criminal money, the governments will wait, and then most probably they will attack them when they see the accumulated amount significant. And by attacking that, they will most probably confiscate criminal money. And of course, they'll confiscate clean money, which appear to be the same place at the same time. And that's probably the biggest fraud, the biggest threat from the governments as of today. Then we need to understand that the example Dan just gave about the Delaware is a very good example. Cryptocurrencies are like offshore monies. Like offshore jurisdictions, they provide, say, knowledge-less or tax-less instrument to settlement. And none of the governments, none of the serious governments will allow that to become an unlimited thing. And Delaware is not the United States, and California has no Delaware inside there, but California still doesn't compete with Delaware about that. New York State doesn't compete about that. Great Britain charges 50%, almost 50% income tax, and Cyprus charges 0 income tax on capital gains, but United Kingdom is not going to charge zero income gain tax, capital gain tax, sorry, because Cyprus does it. Most probably the fate of the cryptocurrencies would be similar to the fate of the offshore jurisdictions. They are small, they provide certain types of services, and the more we go, the tighter it becomes and the harder it becomes to use them, and the less trust it gets. And most probably in in one generation's term, we will lose the advantages of the offshore jurisdictions.
Fantastic. Thank you very much. And so, Dan, I'll give you 30 seconds to address Stephen's question, which is around regulation. Are ICOs dead?
So I would say, first of all, in just to the most famous currency in the world, the dollar only appeared in the 1860s during the Civil War. Before that, there was no fiat money in the United States. So it's not just thousands of years ago, it's first 100 years of our country. I think the SEC decision really has nothing to do with ICOs. ICOs were run by a bunch of charlatans and thieves mostly. Any emerging asset class gets them, and I think having very deeply analyzed what the SEC did with Telegram, it would have been hard to predict they would do anything else. So I don't think I think the kind of madness where you have a bunch of people in Bitcoin and they decide they need to diversify and they buy silly things because they think they're super smart because they bought Bitcoin and it went up a lot. I think that is gone, but I hope and believe that cryptocurrencies will provide a pathway for entrepreneurs to be able to attract investment to what they're doing. And I think we'll have a chance to talk about that in the last question.
Absolutely. So what we're going to move on to the question of security now. And actually, we have two questions from the audience of people who have formulated the questions much more eloquently than I could. And so I'm going to read them. One first is from Stephen Konigsberg again, who says, if the centralized entity systems are so safe, why is it that Facebook, PayPal, Visa, MasterCard, etc., continuously get hacked and leak information when the Bitcoin network has never been hacked? And a second question around security is from David Hearn, who says, regarding some of the dangers which you, Andrei, mentioned in some of your earlier remarks regarding holding crypto, how many of those risks are just due to the newness of the sector rather than some fundamental risk which differs from fiat currency? So a couple of questions from the audience to give you a flavor of the things on people's minds, but I'll come to you, Andrei, to talk about security.
I probably would start with the response to the questions. The questions are very good, but I think the questions, the very nature of these questions is in mixing the grounds, the substances. When we talk about PayPal's or banker banks or Deutsche Bank, which is now shaken and weakened, when we talk about the Wirecard or whatever, we talk about the institutions which are on the ends of the big network of the businesses working with the fiat currencies. And none of the structures can protect people from the general fraud in the end transactions. When you work with a bad constructor, you get a bad house, regardless of whether concrete is good or concrete is bad, right? When we talk about blockchain, the problem is in the very system. The very system of the Central Bank of America is stable and safe. The very system of the Central Bank of Russia is stable and safe to the extent that we know that Russian economy is weak and it's reflected in the monetary system of Russia. That's because of that, we don't hold investments in rubles, most probably, and we convert dollars and investment dollars. But we have dollars, we have euros, we have Swedish kronas, we have other good currencies which we rely upon. We have baskets of currencies, we have gold, we have dozens of assets which we can rely upon pretty much, which are they are low volatile and they provide the protection, specifically when we have baskets of them. The baskets of cryptocurrencies do not. They are volatile, they are much fraud in the very essence and the very core of the systems, and we cannot rely on their systems yet. Here's the answer to the second question. I absolutely agree that the problem with the blockchain generally is not because blockchain is a bad word, not because blockchain is bad as an idea, but because the current realizations of blockchain are not perfect. We don't know whether better realizations would come or not. We don't know whether we'll exchange it for another chain, kind of alpha chain, beta chain, another solution. And maybe we'll have perfect solutions. And whenever we have perfect solutions with low transaction costs, most of the central banks would most probably adopt them and use them instead of the centralized registers. But probably not now, because nowadays the list of names of the vulnerabilities of the same is a couple pages long. I'm not the specialist, I'm not the professional in the field. I tried to read some literature before we started the discussion, and I was amazed of the variety of the ways of fraud which can be committed through the blockchain system, the complications of that frauds, the brilliant ideas of the fraudsters, how do they overcome the security of the system. It's much more complicated, but much more easy to get if you have brains and if you have bad will than the centralized systems.
Fantastic. So what I'd like to do is to come on to how, if one should invest in cryptocurrencies and how one should, and actually that's the general question, but I'll take one also more specifically formulated from Denis Radionov among our panelists. So who puts it this way: let's assume that all countries or companies do actually adopt cryptocurrencies from tomorrow. Let's say that happens. given the fact that it costs next to nothing to start a new virtual currency and it can be configured in a day and be distributed among everyone fairly, what is the rationale for investing in existing ones versus any of the infinite new ones that could be created? And Dan, I'll come to you first on that question.
Okay, I didn't get a chance to answer the last question, so I'm going to give myself a little bit of time to say something about that.
Plus 30 seconds.
No, I mean, this was his question. I just say, you know, the safety and security of Bitcoin, as you noted, the Bitcoin blockchain has never been hacked. The hacks have happened at exchanges. Many, like the most famous was Mt. Gox, which was, you know, an exchange for Magic the Gathering, you know, playing cards originally, and wallets. So, you know, anybody who's listening who is not, you know, up to speed on this stuff and wants to buy some of these assets, be very careful where you leave your money, right? You're not leaving your money in the safety of a private key if it's on an exchange or in your wallet on your phone. And, you know, as Andrei said, people are very clever about stealing it, cloning phones and all of that stuff. In terms of what's worth investing in, I think that's really a great question, right? You might have been able to understand in the mid-90s that the internet was really going to be transformative technology. But if you had invested back then, you might not have realized that Facebook, Amazon, Netflix, Google, and Microsoft were the companies that you should invest in. And I think the same thing here. You know, we see over the next 5 years, there'll be tremendous emergence of interesting new things. Some of them blockchain based, some of them on other digital ledgers, some of them taking elements. And so I think, you know, the idea that if you want to invest in this emerging asset class, you can just buy Bitcoin and never think about it again is a foolish idea. You know, I was mercilessly punished for speaking at a crypto conference and saying that I wasn't sure whether Bitcoin would be around in 5 years because I don't know. As Andrei says, you know, it's 1980s cryptography. It's really old technology. It's a very inefficient system for generating consensus, and I think all of that will emerge over time to create much more interesting decentralized systems for creating value, whether they're in cryptocurrencies or other tokenized assets or just tokens. On top of that, I think it's really important to think about the fact that decentralized assets are unlikely to be successful in the modern world if they don't have really good management teams who are able to understand what's happening in their markets, create strategies around that, communicate those strategies. You know, Ethereum, you know, the Ethereum white paper is one of the most interesting things I've ever read. And they're, you know, Vitalik Buterin and his team are super ambitious, but they're terrible managers. And I think ultimately that will kill their project. And so I think for a long time, we're going to be living in a world where the concept of creating a completely decentralized and efficient cryptocurrency or blockchain is a wonderful concept, and we can try to be there. But, you know, for me as an investor, I'm much more interested when I see a really interesting idea, an asset I think will appreciate in value, and a team of people who are committed to it working out and properly motivated to be rewarded if it works out. So I would say, yes, it's worth investing in, but yeah, you got to be really paying a lot of attention to what's out there now and what's emerging, because there'll be enormous change in the next 5 years, 10 years.
Good stuff. And my apologies, I didn't mean to rob you of your chance to talk about security. We put that down to moderator error. But thank you for your understanding. But with that, we're going to hand over to Andrei to continue. Should we be investing in these cryptocurrencies at all, Andrei?
No, well, I think Dan said most of what I would say in that sense. I will just add a few points. First of all, even if we imagine that cryptocurrencies are doomed to be successful, recall the situation with the smartphones. If in year 2000 you truly believed that smartphones have the future, and you wanted to pick up two best producers of smartphones to invest in them, you most probably would invest in Nokia and Ericsson.
Motorola, maybe.
Or Motorola, where are they?
Or BlackBerry.
And BlackBerry, whatever. And that's the same thing here. Invest in Bitcoin, but most probably Bitcoin would would be the follower of Motorola path. Better currencies would come, better systems would come. And because of that, I'd rather wait and see. And if we talk about Bitcoin as a speculative asset, like Dutch tulip bulbs, very speculative thing, it grows and it falls, and then the volatility is very high. It's extremely hard to predict when it grows and when it falls. With that regard, gold investment is much better because at least you know that gold has industrial application. And worst case, you can use your gold to make jewelry for your wife. And with Bitcoin, you can do nothing. If Bitcoin is not fancy anymore, if it goes out of the hype, it will worth nothing. With that regard, I would stay away from these currencies, at least by the time we really understand that they work, that people, not only the followers, but general people, general business, or general public starts to massively adopt the technology. And then believe me, you will have plenty of time to invest and get returns in hundreds and thousands and tens of thousands of the percentage points, like it was with Apple and Samsung, for example. When everybody understood that Apple and Samsung were the winners, you still have much room ahead.
Very, very good insight. It's made me want to pause in making my decisions on which currencies I take. Dan, you 30-second final reply on this before we go to our next question.
Yeah, I would just say that, I think you're dismissive of the parallels between Bitcoin and gold. I agree that Bitcoin's not good money. It's hard to spend. You certainly wouldn't want to price anything in it. I certainly wouldn't want to borrow or lend in Bitcoin. But I do think it is like digital gold. And, at least from my understanding, the industrial uses of gold are completely irrelevant to the market. And if you look at the sort of financialization of gold investment, probably the physical gold is pretty irrelevant too. So I think we're really much more in the sort of, if you read the book Sapiens, this idea that money is our own collective agreement. Maybe it's unwritten about what exactly has value and what doesn't. And I think that, Bitcoin's made a pretty good argument. Yeah, it's been around for 10 years or 12 years. It's, nobody's hacked it. If anybody who invested, over a multi-year period during that time has made great investment returns, maybe better than they would have gotten in other assets. But I also agree with you and Tom that, if it's like Robert Strauss used to say about Russia. If I had $10,000, I'd invest in Russia. He used to say in 1992. Of course, if I had $100,000, I'd invest 10,000 in Russia. I think that's where we are in the crypto world.
Interesting. So this brings us on to another topic. So, and Andrei, I think this is something that you actually mentioned the other day. So during the gold rush, there was the saying, you don't invest in gold, you invest in the people making the shovels. Is there a parallel that you would draw from that kind of concept to Bitcoin and cryptocurrency world? So where is the value? Is it actually in the currencies, or maybe it's somewhere else?
No, well, it's not the exclusive feature of Bitcoin. It's the normal situation in the world with the gold rush, with any hype, and even without any hype, the facilitators get much value. And regardless of whether it's a failure or a victory, facilitators become rich. And all these exchanges and wallet holders and facilitators and cashiers and people who started to arbitrage the bitcoins, to arbitrate the bitcoins and other currencies, and people who made the fake ICOs, and asset managers and people who run funds pretending that they pick up currencies and they know how to do that. They all make money, of course. And why they make money? Because people want to pay for the facilitation and the advice. And most probably the advice is not real, because people do not know what currency would grow and what would not, right? It's purely random walk around the new market. But when people pretend, they charge 2 20s usually, and then get rich. And obviously it will happen and will happen again. And plain vanilla investors who are, I would say, fancied into the process would pay for that. And if you want to become really wealthy on that, just read articles, pretend you know the subject, create a fund and sell it to the investors.
Dan, I feel like you have something to respond.
He's giving away our business plan.
3 minutes over to you.
All right, thank you. So when I think about who derives value from Bitcoin, I kind of think about it in three different levels. The first, like I think about your Turk or your African or your Caribbean, your Argentinian, your Russian, your Indonesian, right? Somebody who's in a system where, and the Russian's probably not the best example because I agree that the Russian central bank has done an incredible job managing the currency over the last, 8 years, and I think they're just it's very impressive. But I do think that there's a lot of people who are underbanked, who are not served by their local currency, who have incredibly limited opportunities to invest in hard currency generating assets. For me, one of the examples you think about is, think about all the people in the world, if they could buy 5 meters of a London flat in prime real estate for rental, and it was properly managed, of course, that person would be very happy to pay for that and to generate, 25 or 30 pounds every month that would help them to make their budget easier to use. And I think that kind of tokenization is going to be very interesting. I think second of all, entrepreneurs, the system for allocating capital to entrepreneurs with really good ideas is not very effective. It's great if you can get to Silicon Valley or New York or Moscow or London or Tel Aviv or Shanghai, but it's really not great if you can't. And so one of the things that the ICOs introduced, which I hope will grow, and I'm certain it will, is this idea that there should be much more peer-to-peer investment, that people should have the right, there's several African projects where people are using remittances to not only send remittances, but then to allow people to lend money to local borrowers and participate in that on top of their remittances. And so I think hopefully we'll see entrepreneurs getting a benefit from digital ledger based cryptocurrencies. And then investors, I do think investors have done very well and will continue to do well from being invested in. And, there are increasing opportunities for decentralized finance to offer lending so that people can generate interest on their crypto holdings or borrow in crypto if they so desire, right? As of Friday, there's, according to DeFi Pulse, $1.63 billion being lent in based on Ethereum or Bitcoin mostly. And on June 1st, it was 943 million. It's almost doubled in a month. And I think those, all of that stuff is super interesting and provides all kinds of opportunities, and most of the DeFi borrowing is between 6 and 9%, which right now looks pretty good, and a lot of people do it because they want to be long Bitcoin. And if they can get 8% in dollars on top of that, they're interested in that. So I guess that's where I see the value being derived, and I'll stop because I think my 3 minutes are up.
Fantastic. So in actual fact, Andrei, I'll give you your rights of 30 seconds, and then we have 1 or 2 questions left in the system we'll try and take before we wrap up. So back to you, Andrei.
Absolutely, thank you. I would just mention that all can be good theory, but in practice, the companies who now pay 8 to 9%, they're usually in single B- or triple C rating brackets. Which suggests to me that Bitcoin is kind of a triple C currency in a sense, that the risks associated are not less than the risks associated with the companies which are rated as close to default. And I would urge and warn investors about that. There is no free lunch in the economy. The economy is very efficient, and if you get 9% from the borrowers, it means that the borrowers are not able to raise money at more advantageous rates. And paying 9% today in whatever currency is very high. And when you say Bitcoin has no inflation, it's finite, and it's great because other currencies inflate. How, for the God's sake, they can pay 9% in Bitcoins if there is no inflation? What kind of risks do these people take on? So be careful. You better sell shovels.
Well,
Okay.
just if I could just, all of these are smart contracts, and you have no risk of non-payment because the currency is locked up. What most of this is, Andrei, I understand that you don't spend as much time in this ecosystem as I do. What most of this is people who are willing to pay the 9% because they want to double down on their investment in cryptocurrencies. So it's basically people who are, I agree, not very savvy financially, but, happy to provide lending. But they're smart contracts, and unless there's a flaw in the code, you'll get paid.
I just don't understand how it works. Maybe my technical background is weak. I understand if I get whatever it is, Bitcoin or whatever, and give it to you, I give it to you for spending, sort of. So you will use them somehow. You wouldn't hold them for that period of time. If you hold them for that period of time and give it me back, how I get 9% extra. And if you don't hold it and if you put it in use, you don't have them. And you might not have them at the moment of the repayment. And the decentralization of the register doesn't matter in that sense.
So I think we've hit on a question that might require more thoughts and maybe more whiskey and time than we have right now. So I see one question actually from the audience, which I'd like to take. I'll make it a bit broader. So the question was, under the current pandemic-related situation and global trends to move online, is there an idea to develop more or less uniform regulatory framework for cryptocurrencies? But I would broaden the question and just say, do we think that the fact that the whole world has basically had to become more technologically savvy in the last few months, from traditional CEOs that didn't know how to use a phone to grandmothers, is this a catalyst? Could this be a catalyst? Because one of the issues and obstacles we talked about is that people don't really know how to use it. It's complicated and so on. Has that picture changed? Dan, I'll start with you.
So, just taking and even a step further back, I think the pandemic's a great accelerator of all things, including technology. And, certainly we wouldn't have thought of having this debate on a video conference a year ago, and here we are. And, we've got a lot of people watching us. I think it will be, I think we've already been moving towards a cashless society. The numbers I see say there's something like $60 trillion in issued money from sovereigns, and there's around 6 trillion in coins and banknotes. So we already live in a world where most of the money is digital anyway. And as a result, I don't think that it's going to accelerate adoption much faster. I think it may accelerate, the argument that Andrei says has already been settled, but I say we'll see, of whether this massive issuance of dollars is going to impact the relative value of Bitcoin against dollars. We'll see. We'll see. It certainly hasn't happened yet. Of that, I agree. But if that theory is correct, you would think it to hold over time. And so I think it will do that. I also think that one last thing that I would say to answer is, I think one of the lessons of the pandemic, which is not yet learned, but which seems obvious to me, is that our system of having national borders doesn't match with our economy. It doesn't match with our global health systems, and it certainly doesn't match with the movement of people that we were used to just a few months ago. So I think one of the reasons why we might see a movement towards more decentralized money and other things is because I think the role of the nation state will be challenged over time by all of the sort of natural things which make us much more likely to be located in one economy and to see ourselves as one little planet rather than hundreds of countries.
Dan's touched on some big topics here, but I'll come over to you, Andrei, again to give your view. As has the pandemic changed things here in terms of the basic case?
No, well, the pandemic may not change things because the pandemic itself doesn't produce new tools. The attitude changed, right? And I haven't held a piece of cash since 1st of March in my hands. I'm still alive, and I do all I need to do. And I continue working, and my company continues to work, and I continue buying things and selling things and doing transactions and whatever. And because the system's already ready for that. That's not the change because of the pandemics, but that's a change because the change is mature, and the pandemics becomes a trigger for that. And that's great. And by the way, I didn't trade in Bitcoins. And I use fiat money, and I use the online banking with fiat money, and I'm pretty much happy with that. With that regard, we rather see the changes when the situation occurs than experience changes because of the situation. It's like when you switch on the light, you see things better, but things do not appear because of the light. We've had the virtual world already in place by that time.
Yeah. No, very good point. And then I will give you your sort of wrap up comment on this. But just before doing that, I'll reflect a couple of other comments that have been made in the chat here. One is there's some disagreement around this notion that transactions are very expensive or necessarily expensive. There's a view that it's the exchanges that make them expensive, but now with atomic swaps are already a reality and very low cost and can easily be adopted with the fintech. So there's a question around that. And another observation that we shouldn't assume that blockchain will be changed or will disappear. It will have to evolve, of course, in order to sort of to keep up. So anyway, a couple of observations from one of our keen, enthusiastic listeners. But Dan, back to you.
Well, I guess I would just like to say thanks to Andrei, who has helped shine the light and the bright light of his own intellect on this. I really appreciate. It's easy for me to come and talk to this. I could talk for hours about it, but for Andrei to come and share his deep knowledge of economics with us on a subject where he is not being paid to keep up is really great, and I'm really grateful for it. And I would love to one day continue this conversation. I think it'll be interesting to see how digital ledger and crypto assets evolve over time. And maybe one day we'll be having this conversation, and Andrei will be talking about his new fund, investing in crypto assets.
Certainly, when that happens, that's worthy of another webinar. So I think with that, actually, we're basically coming up on time. So I think it's time to wrap. I don't know whether we've given a definitive answer to our viewers as to whether Bitcoin is the future or should be left in the past, but it seems like there's definitely something there. We should be investing in something, but whether it's Bitcoin or the shovels, a question that remains open. And I think that I pick up on Andrei's interesting observation around how if we'd backed the Blackberries and Nokias, we wouldn't be winning the sort of the tech investment world. I think that's an interesting observation, which counters some of the observations from Dan in terms of assumptions around Bitcoin. So at very minimum, we've given our audience a lot to think about, a lot to sleep on, and maybe we'll come back and do this again and get closer to the answer one day. So thank you very much to Andrei and to Dan. Thanks for the initiative, Dan, and thanks to our audience for giving us your ears today, and wish everyone a successful continuation.
Thank you.
Thanks.
Thank you.